Let's talk about the future of your money. And I don't mean in some distant sci-fi kind of way. I mean a future that's being designed and debated right now. It really boils down to two huge ideas: stablecoins and something called a central bank digital currency. You could just think of it as a digital dollar. So what are they, and what could they mean for your wallet? Let's dive in.
Before we jump into all the new shiny tech, we've got to ask a pretty basic question. Why are we even having this conversation? I mean, if you've ever felt like sending money, paying a bill, or just getting paid is way slower and clunkier than it should be in this day and age, well, you're definitely not alone. Our current financial system, it turns out, has some pretty serious cracks.
For starters, let's talk fees. All those tiny little charges you see for swiping a card or wiring money, they add up. We're talking up to nearly 1% of the entire country's economic output. Just gone. And then there's the speed, or the lack of it. Remember the stimulus checks during the pandemic? It took 5 months for that money to get to people who needed it like yesterday. And you know, while some of us are just annoyed by slow transfers, millions of Americans are completely locked out of the system. This has led to a whole bunch of private payment apps popping up, which sure, they're convenient, but they bring their own worries about stability. The bottom line, we're falling behind.
Let's just pause on this number for a second. 7.1 million households. We call them unbanked. That means no checking account, no savings, no easy way to get a loan or even just build credit. These are folks who often have to rely on really expensive services like check cashing places. So when we talk about redesigning money, this isn't just some abstract technical puzzle. It's about real access and real inclusion for millions of people.
Okay, so how do we fix all this? Well, two very different philosophies are starting to take shape. On one side, you've got private innovation, and this is where stablecoins come in. These are digital currencies created by companies running on public blockchains. And on the other side, you have the idea of public infrastructure, a central bank digital currency, or a CBDC. This would be an official government-backed digital dollar. You can almost think of it as private companies versus a public utility.
All right, let's tackle the private approach first, stablecoins. Now, you've probably heard of other cryptocurrencies that are famous for their wild up and down price swings. Well, stablecoins are engineered to be the exact opposite of that.
The whole idea is actually pretty simple. For every one digital stablecoin that's out there, there's supposed to be one real US dollar, or something just as safe, tucked away in a bank reserve somewhere. This peg is what keeps its value stable, right at $1. So the promise here is you get all the cool tech benefits of crypto, like super fast global payments, but without all that crazy volatility.
But, and this is a big but, this private approach comes with some huge questions. The biggest one is about solvency. Is that dollar really in the bank? Can they prove it? And what happens if everybody wants to cash out their stablecoins all at once? Could the company actually pay up? That's a massive liquidity risk. And of course, like with any new financial tech, you've got the risk of fraud, illegal use, and just plain old technical glitches. A bug in the code could be an absolute disaster.
And all those risks kind of lead us right to the public option. It makes you wonder, right? What if the government just created its own digital cash? Well, that's the core idea behind a central bank digital currency, or a CBDC. Now here's the most important difference you need to understand. A CBDC is a direct liability of the central bank. So think about it like this. The money you have in your Chase or Bank of America account right now, that's technically an IOU from that bank, but a digital dollar would be a direct claim on the Federal Reserve itself. It's the exact same as a physical dollar bill in your wallet, just digital. It is, in theory, the safest form of money there is.
But launching a CBDC isn't some all-or-nothing switch we flip. It's really a spectrum of different possibilities. We could end up with a synthetic model, where you have private stablecoins but they're super heavily regulated by the central bank, or a two-tier system, where you could get your digital dollars through your normal bank. And then there's the most extreme option, a direct CBDC, where you could basically have an account directly with the Fed.
So we have these two big paths, right? Private stablecoins and public CBDCs. But here's the thing, and this is probably the most important insight from all the research. The label, stablecoin or CBDC, it's not actually the most important part. What truly matters are the tiny design choices that go into building it.
You see, for way too long, this whole conversation has been completely sidetracked by these really nerdy technical questions like, oh, should it use a blockchain or a traditional database? But you know what? That's like arguing about what kind of tires to put on a car before you've even figured out how to design the engine. It's totally missing the bigger, more important questions.
These are the real questions we need to be asking.
Do we want a system that lets you transfer money directly to another person, peer-to-peer, just like handing them cash? Or should it always go through a bank? What about privacy? Should it be totally anonymous, or should you have to prove your identity? Should anyone be able to use it, no questions asked, or will you have to sign up and get approved? These policy choices are what will shape our future, not the tech label.
And that brings me to this perfect analogy from the research. We're getting totally caught up in designing the seats before we've even figured out how to build the plane. We have to understand the core engine of what we're building before we start arguing about the cup holders.
So, how do you start building the plane? Well, that is exactly what a major research project called Project Hamilton has been trying to figure out.
And this isn't just some academic paper. This is the U.S. Federal Reserve, the people in charge of our money, partnering with some of the smartest engineers in the world at MIT. And their goal isn't to say we should have a CBDC. Their goal is to figure out if it's even technologically possible to build one that could handle the insane scale of the entire U.S. economy.
And when they say high performance, they are not kidding. Their target is a system that can process over 100,000 transactions every single second. To put that in perspective for you, the entire global Visa network handles just a few thousand per second. And they're aiming for transactions to be final, like done, irreversible, in under 5 seconds, with no single point of failure. This is about building something truly industrial strength from the ground up.
Okay, so let's zoom out. After all that, what's the big takeaway? If you're going to remember just a few things from this whole conversation, what should they be?
First, this whole movement, whether it's stablecoins or CBDCs, is a once-in-a-generation opportunity to completely rebuild our financial plumbing from scratch, to make it faster, cheaper, and open to everyone. Second, and this is so important, don't get lost in the labels. The real fight, the thing that will actually impact your life, is about the design choices around things like privacy and access. And finally, getting this right is not a job for one group. It's going to take technologists, economists, and lawmakers all working together.
At the end of the day, this isn't just a conversation about technology. It's really a conversation about our values. The architecture we decide on for our digital money will shape our economy and our society for decades to come. And so it leaves us with a really fundamental question. What kind of financial future do we actually want to build?